Hey, what's going on, guys? This week, sitting here with Sean, a little bit different setup you see in the studio, but still coming at you with a lot of good stuff that you need to know. Hey, how you doing?
What's happening? How are you?
Doing well, okay.
Yeah?
Yeah, a lot going on.
Just okay?
Just okay. Yeah, so kind of a lot of geopolitical stuff going on this week, huh?
Yeah.
A lot of action-packed things going on.
I think we're going to talk about some, major stuff and some serious stuff, but
Yeah.
I think it's important to, kind of lay the ground rules and we're not looking to pick sides or anything like that.
Correct. So let's just clear the air here. We have a lot of geopolitical stuff, a lot of things that could be taken a couple different ways. But what we're going to go over today and what we're going to talk about is nothing political. We're trying to keep any views out of it. It's just matter of fact of what's going on.
Right,
So,
and how it affects real estate.
Exactly. That's what we want to educate and bring to the table. So we had some big go over the weekend. Of course, we have the Middle East tensions going on.
Yeah, so biggest thing is, how does that affect real estate and what we do every day for a living? And I think one of the biggest things is we're going to see some volatility with interest rates and oil prices. So oil prices are important because it adds to consumer spending and how much it costs to live every day.
Yep, and that's so. In my weekly rate updates that you guys get and everyone gets, there is anything geopolitical. For housekeeping purposes, when there's conflict, when it was Ukraine. When it was any tensions with China, when it was now we have what's going on in the Middle East with the United States and the military action. So anything that is negative like that in terms of something happening with tensions and war is generally good for mortgage pricing. I always say anything negative or bad is going to help your mortgage rates. Mm-hmm. Now, that's usually historically that's what happens, but this one's a little bit different with the oil and what that's doing for us.
Right.
And to us, I should say. So inflation is bad. The battle inflation, you raise rates, you take them higher. So with everything happening over the weekend, I went through, I'm like, okay, here we go. Our rates are going to drop out. That's really what was going to move us. Come into the morning yesterday, and the rates are actually now worse again. And I'm like, what? So, and thinking about there's consequences with, especially with geopolitically where that is. So with oil, like I said.
Right. So you mentioned Ukraine and Russia. So back when that conflict started.
Yep.
What happened? We saw oil jump, to 20-30% per barrel or
correct.
Something to that effect. And we're seeing that now. Oil, I think, is up $10 a barrel or 10%.
Yes.
Up to around $79 a barrel.
Yep.
So that's going to affect the price of gasoline and everything that's produced, and so people are going to feel it at the pump, and then they're not going to maybe want to spend money on the house or whatever. However, it wasn't very long before we saw those oil prices go down.
Absolutely. Yeah. And we saw some of it. Europe brunt the bear of that one.
Right.
And that was the number one exporter-importer situation. But oil prices being high, just to your point, inflationary. Things cost more. You pay more at the pump. To make anything takes oil and petroleum. Inflationary, not good for pricing. And that's where we saw our mortgage rates go from the lowest they have been in, and week after week, the 5.99999 and blast across that. We're the lowest we've seen in years, where it was just 6.1. It's not a huge difference, but still, our rates tick back up. We're back above 6%, 6.1. But you made a good point too, which I tend to agree with you on, is how long this might last. So we might see a yo-yo effect. So, and you made a good point too about the I didn't even think too about our Navy and their Navy, how things could play out, and the Strait of Hormuz. Yes. So that's where all the oil filters out of. And you made a good point too, if you want to talk about it's not so much oil from them, it's other places and getting bombed and things.
Right. So a lot of talk about the Strait of Hormuz being, it's basically patrolled by Iran, right? So they have their Navy there, and they're threatening to, light fire to all the ships that try to make it out of the Strait of Hormuz.
Yeah.
But it's not even that. It's, I think why we're seeing, the United States is seeing, and some other countries are seeing oil prices jump. It's not because we get our oil from Iran. Mm-hmm. It's because the oil from Saudi Arabia goes through that strait, trying to make it to the United States and other countries. and they're threatening. There's that threat. But I think the United States is going to take control of that strait. They're going to make sure that, and it's, it might be days, it might be weeks where we gain control of it, and that's where I think we'll see oil prices starting to come down. But also we have Iran is actually targeting oil fields in other countries like Saudi Arabia, Oman, Qatar. So if they're targeting those plants that are in those countries are shutting down. So they're stopping production because of the threat of being bombed.
Yep.
So it's a lot of stuff going on. So until we figure out and stop them from launching, missiles and bombs and bombing those fields, then I think we'll see, those oil prices come back down. I think we'll see the volatility calm.
Yes. So it might be a short-term thing as well.
Yeah.
So it's. Yeah.
I mean, I'm no expert in war, right? By all means, I will never claim to be.
Yeah.
But I don't think it's going to have a really big direct effect on our real estate market, at least around here, because we have to remember, right? We have a huge shortage of inventory.
So was it last week? 3 weeks?
Painfully 3 weeks last week was where the numbers were in the Lehigh Valley.
Yeah.
So, it's everything's supply and demand.
Yeah.
Right? So the more people want something, the more expensive it's going to be. And in order for us to reverse and go the opposite direction, it's going to take a lot of homes not being sold.
Yeah.
And there's still 11 buyers for every home that's listed.
Mm-hmm. Yep. I coming in today for when we were shooting our cast here, just on this weekend, I said I felt like someone flipped a switch. To be honest, like this weekend was, with everything going on, just offers and offers and multiple offers, and
it's March.
Yeah.
It's March.
It's unbelievable. Just the one I just had was in an over 55 community, listed well. Again, 25,000 over list, multiple offers, waiving appraisals. My client was putting down $250,000. Luckily, we got an appraisal waiver on it. But they're going to pay for commissions. They're going to pay transfer tax, like everything guaranteed that they could possibly do. And that's where these rates variance. By all means, I'm looking in the camera, don't let anything scare you guys if the rates are 5.99 or 6.1, because again, that house just went for $25,000 or so above ask price. So it is what it is.
And we just had one of the same thing. We had 11 offers on it, $335,000 listing.
Oh, geez.
Sold for like $360 or something like that, and 11 offers, and the rates are good. Like you can't take this and say, okay, I got to stop because there's a conflict going on in the Middle East.
Exactly.
That involves the United States, and no matter how you slice it and dice it, real estate's the best investment you can make.
Absolutely.
Right. Yeah. So rates going up and down. If hopefully they come down a little bit for a short time, right, because of this all going on, and it'll help that first-time home buyer, those downsizers that are looking to get into a decent rate when they're buying a home. But at the end of the day, you're going to continue to build equity in yourselves into your retirement. You're going to save money for your retirement by owning a home. Yep. Sitting on a sideline and renting, you're literally paying somebody else's mortgage.
All day. And literally you are.
Yeah.
And it's and I agree with you. I think as a takeaway from this week is we'll probably see a little bit higher in rate, but don't freak that they're going to go to 7. It's not going to happen, guys. And to your point, it's probably short-sighted. It's probably going to resolve itself. We'll take care of everything that needs to be done, and the oil will come and hopefully come back and to normal levels, and then we'll probably see rates dip back down to where they were. And the one thing I do also want to touch on for this week, so many people that I talk to, either refinancing or purchasing, like their magic number would be like 5.5%. Like if rates just got okay, you can obtain that rate if you would like that rate. If that makes you feel more comfortable as a buyer, pay a point. 1 point right now will get you probably around like a 5.5% interest rate. Right. And in the long run, looking at the math, you might break even paying that point. Might take you 2 years.
What is a point?
All right, so a point is 1% of your loan amount. So you can have the opportunity to go ahead and you can pay up to like 2 or 3 points. It doesn't make sense after a while mathematically. So you could take a 0 point interest rate at let's just say 6%, and that's your rate. or you could pay 1% of, so a $300,000 loan, you would pay an extra $3,000 to get like a 5.5% interest rate. The spread is pretty good on those. So you get your bang for your buck. And yeah, I'm paying this out of pocket at closing, but yes, you might be saving, say, $100 a month, $1,200 a year. In the long run, if you're going to be there, you do the math, it would save you probably $70,000, $80,000 of interest spending the $3,000. So.
And you know what's funny? Nobody ever talks about, like, you know, having a mortgage on a house is actually, there's tax benefits.
Oh my God, yeah.
Right?
Yep.
When you buy a point or pay, you know, 1% for a point to lower your interest rate, that's an additional tax incentive. That's a tax write-off on your taxes.
Absolutely.
So it's not like you know, if you're paying $3,000 for a point on a $300,000 mortgage, that $3,000 now becomes also a tax deduction.
Yep, all day. And you do your taxes, those real estate taxes, mortgage interest, big time. That's where I have a lot of people where I send out their closing settlement sheets on the yearly closings when they do their taxes. And they see it, they're like, oh my gosh, I didn't realize all these benefits I'm getting from. And taxes you reimburse the seller at the closing table.
Right.
Those are taxes paid that tax year. So all those benefits go along with it in the long run, which you don't have those, especially if you're single and a higher tax bracket. That could be substantial savings. So, yeah.
So overall,
don't freak out.
Don't freak out.
We're going to be okay. I think everything's going to work itself out. Any questions you guys have? Sean's always here, been following this week after week. But again, wanted to keep it any kind of pro-war, anti-war aside. This is just the facts we're talking about for what we have and how it impacts our real estate market. Always trying to bring you what you need to know. But rates are going to be fine. They probably ticked up. They'll probably come back down. But to Sean's point, this market is getting really hot early this year. If you watched last week, it was our frigid frozen getting to hot. So, person perfect. All right, Sean.
Thank you, buddy.
Thank you, guys. Talk to you soon. Have a good week.